It's Alan Porter. Alan, what's going on, man? How are you?
I'm doing well today, Neil. How about you?
Fantastic. And today's topic, the wealth preservation blueprint, how the rich protect millions from lawsuits, taxes, and market crashes. Making money is one thing, keeping it is another. Here's how the wealthy protect millions from the three biggest threats. And Alan, why is wealth preservation more important than ever for high net worth families?
Well, Neil, because of lawsuits, rising taxes, inflation, and market volatility can destroy wealth faster than you can rebuild it. Protecting what you already have is the smartest move that you can make in 2025, upcoming 2026.
100%. What are the biggest threats to wealth right now?
Well, rising taxes. Do you realize if President Trump had not gotten into office, the taxes would have gone back to what they were in 2017? And just like people in the 12% tax bracket, not all of them, but some of them go up to 25% tax bracket federal. That's over 100% increase. But rising taxes, we've got a $37 trillion deficit. Hopefully with these tariffs that Trump's bringing in and all the money for rebuilding, we can get those debts down. But that's one of them. Market volatility. The market's doing great right now. But, 2018 didn't do too good. 2008 was a disaster. And people forget the lost decade of the 2000s. If you put $100,000 in 2000 and 2010, it was down to $96,000. And that does not include the fees you pay that financial advisor, whether you make money or not. So you probably had $80-some thousand. People have no idea about it. Inflation is another one. When we had Biden, inflation was up to 6, 7, sometimes 9%. It's getting under control right now. But business liability with all these lawsuits happening all the time, it's very, very hard to protect yourself. Now, estate tax changes are coming in 2026. It's absolutely a godsend for people because the estate taxes have gone, a lot of them been done away with. But here's another thing too, lack of liquidity during downturns. When you've got a stock portfolio and it goes down, that's not when you want to sell. Okay. But if you got money in a cash value life insurance policy, and I'll get this with the next question, but you've got to have liquidity, use control of your money. And when I spoke at Harvard, I brought this up. There's about 150 people there. There was CEOs of Fortune 500 companies, attorneys, lawyers, other people, very successful business people. And I asked him, I said, I can change your financial future with my strategies and my products, but I want you to take charge of your financial future. I asked him a question. I said, would you rather have your house paid off or mortgaged to the hill, but you had access to a financial entity that you own and control? Now, Neil, it's an emotional subject, and the vast majority stick their hand out, I want my house paid off. I said, that's all well and good. And I told him, that's emotional. But what happens if you lose your job? What happens if you become disabled? There's more houses lost to disability than anything in the United States. I said, because if you lose your job or become disabled, you can't pay the taxes on your house and they'll confiscate it, or the insurance. And that's a must to have when you have a mortgage. But if you have access to a financial entity such as cash value life insurance, you can pay your tax, you can pay your insurance, you can save your credit and save your house. And people are not prepared for that.
How does cash value life insurance help protect wealth?
Well, first off, the other thing, you have access to it. Okay. You've got tax-free access. That's another huge thing. You become your own bank. I've done this for a decade and a half. And what I mean by becoming your own bank, when you borrow from yourself, you are compounding interest for yourself and not the financial institution. Now, I had a gentleman that was, he wanted to do my tax-free retirement plan. He was 42 years of age. He just retired from the military. He wanted to do my tax-free retirement plan. But I asked him, how much debt do you have? He said, well, I've got a new house, got a great interest rate, 2.75. I said, that's good. He said, I got a couple of cars, a loan, and a credit card. And I asked him, what's the effective interest cost on that? And he didn't know what I was talking about. So I told him, I said, well, don't feel lonely. When I talk to people, most everybody doesn't know what I'm talking about, effective interest cost. But what this is, Neil, let's say, and then what I told him was basically, I want you to take this form, fill it out. We'll do a Zoom conference following week. And I said, you got $461,000 in debt. That's not your problem. The problem is the 49.76 effective interest cost you're paying on that 2.75% mortgage. And he said, how's that possible? I said, because it's not going to get down to the 2.75 until the last couple months of the mortgage. I said, you have a credit card here that's over 90% effective interest cost. And I would guarantee you, 85 to 90% of everybody in the United States has credit cards. Their effective interest cost on their credit cards is over 85 to 90%. Now, I said, you got great credit. But I said, your average effective interest cost is over 46%. And I asked him, I said, what financial vehicle are you investing in right now in your 401k or anything else that gives you a 46% return on your money? He said, well, nothing. In fact, I lost 10% of my 401k last year. And I said, you're putting $1,000 a month into that, aren't you? He said, yeah. I said, well, take that $1,000 and put it to this tax-free bucket of money in this whole life insurance policy. And by the time you're 52, you're going to have your debts paid off 14.17 years faster, save $73,000 in interest, and there'll be a cash value in that policy of tax-free money for over $130,000 that you can borrow anytime you want. You don't even have to pay it back if you don't want to. It just comes off the death benefit. It's a lien against the death benefit. And all college education for your kids is the same thing. And the death benefit on that deal right now was $400,000. I said, you let that grow to age 65, and that cash value is going to be close to $250,000 of tax-free money that you can use for policy loans or retirement. That again does not affect the taxation of Social Security or the means testing Medicare Part B. You're protected from lawsuits, liens, and judgments, and it eliminates or mitigates all the risk in retirement that a stock portfolio only compounds. And he said, Alan, you made a dream of mine come true, but why don't people know this? And I told him, I said, it's not rocket science. It shouldn't be taught in high school. But Neil, I've got college professors with PhD degrees in accounting and finance. They have no idea what I'm talking about. And I've taught some of their classes. But it's just a matter of education for people, and they need to know how to do this stuff. When I say you borrow from yourself and you pay yourself compounded interest for you and not the financial institution. I just bought my wife a new car a couple of weeks ago, and I borrowed from my cash back, and I paid myself. But understand this, Neil. You've got a pile of money, a tax-free pile of money that you can borrow from. You don't have to pay it back, like I said. It just comes on your debt benefit. But that continues to come. Now, when I pay a financial institution, that money's gone for me forever. It'll compound for the financial institution, but not me. But when I pay myself, it compounds for me, and my policy is going to be worth tens of thousands of dollars more of cash value than it is right now because I'm paying myself back. And I eliminate the effective interest costs that I pay on the money that I borrow.
How do annuities fit into the wealth protection blueprint?
Well, one of the great things, annuities provide guaranteed income. They protect your principal from market loss because you're guaranteed by contract never to have a loss due to a market downturn because we use indexing strategies to grow our cash. And in retirement, it's about stability. It's already been proven by Harvard studies that people with guaranteed income live a longer, happier, healthier, and less stressful life because they don't have to worry about the ups and downs of the market. They remove the fear of outliving your money. That's the number one fear in retirement, Neil, is outliving your money.
What strategies help protect large estates from taxes and probate?
Well, irrevocable life insurance trusts called ILITs, charitable remainder trusts, family limited liability companies, and gifting strategies. But there's all kinds of strategies out there, Neil, that I work with my tax strategy team. And I have a team of people, top tax-specific attorneys, CPAs, and other specialists in their fields. And what we do is we collaborate together to come up with solutions for people's financial problems. And many times this involves taxes. I just saved one client through a tax strategy that my team did. He's getting back $2.2 million in taxes he's paid over the last 4 years.
What's the first step to creating? Yeah, go ahead. What are you selling?
I said, he's a happy camper.
Oh, yeah. What's the first step to creating a wealth protection plan?
Well, first off, go to my my website. I've got all kinds of articles, videos, newscast. I've been interviewed on several television stations across the United States. But make an appointment with me, and we can get up with my team of experts. I've got one, had one scheduled this morning, and I've got another one, two more before Thanksgiving. But we can get up with these tax experts that I have on my team, and we can change your life. But you got to call me.
All right, at 910-551-1046. Or email him at strategicwealth, the number 0 @gmail.com, or go to strategicwealthstrategies.com. Thanks again,
Neil,
Alan.
one other thing, Neil, understand this. Go to my website. We'll set up an appointment. I don't charge for my consultations. Okay. This is all about education. I'm very, very passionate about what I do, and people need to know this information.
All right. That was the Strategic Wealth Strategies podcast, guys. Take care.